Hey guys, welcome to the channel. I'm Nitin Gupta. I work as a research analyst for a small hedge fund called Ticker Trends. Today I'm going to cover CELH's holdings. More specifically, I'm going to look at Alani Nu because I think the Alani Nu acquisition by CELH is a game changer for the stock going forward, and the risk reward right now is potentially really good. I think a lot of the market as a whole is not understanding the Alani Nu opportunity. I've been looking at Alani Nu like since September last year, and when I knew that CELH was acquiring them, I was really excited because the momentum in this brand is quite amazing. And actually, I believe this could be the next CELH. And there's a scenario where over the next 2 years, Alani Nu actually takes over CELH, and by the time the stock will probably be three figures, and people will be left out and thinking what happened. So we'll cover through some alternative data. We'll go through some Amazon data. We'll go through some search trends. We'll go through some other data that we use at our hedge fund to look at the companies, to analyze them. I'm going to give you some market positioning around Alani Nu, and then some scenarios that could play out potentially over the next 2 years, and how it could end up being a bigger brand than CELH itself, and what could that mean for the stock going forward. So as we can see from the slide here, first of all, like, we'll talk about CELH, what they sell. If you don't know anything about the company, the CELH company basically sells hydration mixes as well as energy drinks. So they really came onto the scene over the last 3 to 4 years. They went from a market share of 1.2% to 11% as of Q1 2025. At one point during Q1 2024, they reached up to 12.3%. So this is the only company besides Red Bull and Monster which has been able to crack the 10% share in the energy drink market. Like that's quite a huge feat, honestly, because no other company has been able to do it. There's some concerns around the management, which we will get into as we progress through this video. So the one thing that I want you to kind of focus on, and I will be covering this a lot specifically going forward as well with some of the stocks that I cover, is alternative data. So in this case, we're looking at this trend that I believe personally was the reason why CELH as a brand was impacted. So what happened during summer of last year was CELH was on this huge, just market gaining share. You'll see like how this in Q2 and Q1 is when this market share was basically flatlining, and at the same time you'll see that the trend for cyanide in CELH was going like astronomically high. So what happened was on TikTok, there was some rumors going around that CELH has cyanide in it, and that is the reason that cyanide is a cancer causing agent, and that really gave a lot of reputational harm to the CELH brand itself, and a lot of people stopped drinking it. Even in my conversations with people still think that energy drinks have cyanide, and the energy drink market, I believe personally, the reason why it was not doing so well over the last 6 to 9 months was because of these fears. But the product is such that you end up you're so addicted to this product that you'll go back to it anyways, and that's why the market has been coming back. It's the strongest CPG product right now, in compared to like all other products that are available out there. So basically, you'll see here the stock was kind of topping out when the trend was topping out here. So that was the reason why, like, that was, I believe, the primary reason why you'll see these trends starting to flatten out afterwards. The PepsiCo deal, yes, maybe that impacted this quarter, but like since then, the revenue as well as the market share has continued to decline. So that's something that's really important to look at. So the next thing is Alani Nu. Now Alani Nu is quite different in comparison to CELH in terms of the market positioning. So CELH pretty much is only hydration and energy, whereas Alani Nu, and the reason why I'm so excited about this acquisition is because it has all these adjacent categories that it can go into. So they have protein shakes, they also have pre-workouts. The pre-workout category is not that great. I've actually tried the shakes myself, and I absolutely love the shakes. And the protein category, the trends have been very strong in that category as well. So that's the other reason why I really like the fact that they are expanding into adjacent categories, because then it won't just be a pure play energy drink company. There'll be other things that they can get into. So I actually tweeted about this a while back. I can leave my Twitter handle in my comments. You can go follow me on there as well. So yeah, this is the next thing that I'm very excited about. So this is basically the combined share of CELH and Alani Nu over the last 5 quarters. So you'll see like Q1 2024, CELH was at 11.4%, and Alani was at a mere 2.9%. Since then, CELH has kind of remained flat, but the combined share keeps on going up. So we went from 14.3 to 14.4 to 15.6 and at 16.2 right now. And I'll cover this, actually is probably going to be around 17% when the next earnings come out, and that's where the opportunity lies, as well as other things that we will cover going forward here. So you'll see in 2024 Q4, this is based on these numbers is when the acquisition closed. So they only had 3.6% share at that time. Alani Nu did, as of Q4 2024. But as of Q1 2025, they got 1.7% more share. So they basically gained 50% more share in that one quarter. So people can say it's a fad, and I do understand that fact, but I'll go through some more alternative data to show you that this fad, if it is a fad, it's going to be here for at least a little bit. And in the meantime, there's probably some decent money to be made in the stock if this fad turns out to be, like it has some sort of stickability for the next like 12 to 24 months. So I do like, there's a lot of concerns around the cannibalization. Cannibalization basically is that, well, if Alani keeps on growing, is it going to take share away from Celsius? Now we can see that, yes, that's probably something that is happening to some extent, where we're seeing that Celsius is staying flat to slightly down, whereas Alani is catching up, but you'll see the combined share is still up, right? So there is a little bit of cannibalization, but the thing is Celsius, most of the users, like the drink, the consumers for Celsius are split 50-50. So if it's 50% males and 50% females, whereas Alani is 92% females, according to what Celsius has said in their earnings call. So that is really, really important, because even if Alani Nu cannibalizes some of Celsius's, like consumers, they'll still be gaining like a huge category of people. Now I'm going to cover some TikToks and stuff like that I went through, and this is the primary reason why they're doing so well, because the social media strategy has been amazing. And Congo Brands, who also owns Lunchly, as well as the Prime Drinks that you probably have heard of, are very good at this. They're very good at generating momentum and marketing on TikTok. So this is the reason, and they're going to get 8.5% share of the company, and they will be advisors to the company for the next 2 years, and and their incentives are aligned, because they'll have to keep the shares for a period of 2 years. So I believe this trade is definitely on for at least like 12 to 24 months, at which point it'll be important to see what the search trends is saying, what the sales data is saying, and is it important to get. It'll be very important to get out on time, because law of large numbers is finally going to catch up, and they're probably going to start stagnating as well. But right now, the Q on Q or even the month on month growth for Alani is just through the roof. In some ways, it kind of reminds you about Celsius, when Celsius was just, at this time where the stock just went berserk, and the share also like basically 10x over a period of 2 years, right? So 2 or 2.5 years. So that's something that Alani might not be able to do, just because like their starting point is about 3%. But even if they were to do like a 4x increase in market share and get to a point where they're parallel with Celsius, and I'll also explain why their 10% sales or 10% market share is way more valuable for the numbers as compared to the 10% for Alani. So we'll cover that as well. So here, as I was covering, basically Celsius's brand positioning is functionality for athletes, whereas Alani is centered around community empowerment and wellness for young women. So this is their entire brand strategy. This is their entire marketing strategy. They're not catering to your athletes or like day-to-day active females or anything. They're just like it's just a lifestyle brand, and that's the beauty of this brand, and that's why I feel like this acquisition is huge for Celsius. If this was acquired by someone else, like a smaller company, like not PepsiCo, because PepsiCo would have not been able to run this company really well just because the number of brands they have. But for Celsius, like if they're able to leverage what the advisors are going to tell them, they can actually like take some of those learnings and maybe use them to Celsius as well. And they are actually going to do a brand activation this summer. And again, like that's another thing that's really important to know here. Alani Nu management knows how to manage this company, how to manage this category, given the fact that they've been able to gain so much share in such a short period of time. This company started in 2018, right? And now they have 6% of the entire market. That's huge. So they might be able to, teach a few, like 1 or 2 things to Celsius, and Celsius might actually benefit from it. So that will be the best case scenario, but I don't know if it works out. So this is a slide that I am extremely excited about. So this is basically Mulo. This is the sales data based on various channels. So this is the scanner sales. So basically how this works is when I'm Celsius, I sell something to my distributor, in this case PepsiCo goes out and sells it to multiple places, grocery store A, B, C, D, wherever, like convenience stores and everything else. And this is what the total sales happen at those retail locations. So I might sell something as Celsius for $1. It might go to PepsiCo, and PepsiCo is gonna distribute it to different places, say like a 7-Eleven or something, and 7-Eleven sells it for $1.60. So the $1.60 is what gets taken into this. So this is not entirely Celsius sales, but this is the final sales at the customer level. So the reason why I'm pulling up this slide is basically if you look at the Celsius MULO data, so it was flat to going down for this period from May 19, 2024 to November 3rd, 2024. Since then, it went further down up till February 2023. But now we'll see that this is coming back here. Like we are finally seeing the sales data actually growing. That could also be because of the category tailwinds, because this category itself is doing really well. But this also could be because Celsius is getting to a point where they have reached trough valuation and they're benefiting for like trough sales, and now they're gonna at best at least flatline, and won't be that they'll continue to go down. So that's the thing there. But the thing that's most exciting here is the Alani Nu data. So this these blue bars are basically Alani Nu. So you'll see from May 19, 2024 to December 1st, 2024, we were basically flat. Still they were gaining a decent amount. I mean, you wouldn't say this is flat. This is still about 20 how much, like 12, 16, like almost 20% growth over here. And they kept on growing, but then they had a couple of 3 months where they were flat, and then you'll see this robust growth going into 2025. So from this period ending January 26, 2025 to April 20, 2025, the sales have grown 55% over a 4-month period or a 3-month period. So this is where I think the market is sleeping on Alani Nu, and I'll cover why this 123 million is like more important and more accretive to the bottom line than this 218 million, and we'll get into this as we go along. So basically, like we covered here, right, like as of April 20th, 2025, the Alani Nu sales were 123 million for that 4-week period. Now this Q1 2025 share that's covered here in the Celsius presentation says Alani was at 5.3%. The 5.3% share is for the entirety of the quarter, so from January 1st to March 31st, 2025. If we annualize this latest 4-week period as of April 20, 2025 at 123 million, my estimation is that Alani is now, as of April 20, 2025, a 16.2% market share. And we've already established that Celsius is now flat to going up during this period. So you can say Celsius is at around 11%, and then Alani is at 6.2%. So this combined share, which says 6.2%, is actually 17% plus. So that's where we're getting into a very interesting place. Now, if Alani keeps on gaining share like the way they've been gaining share in this case, 17 to 18%, this will make them a huge player. You'll see there's no other player in this mid category which is even close to them. So now they're kind of fighting Red Bull and Monster on that end. Obviously, the brand value and the international sales because this is just US sales, right? So the brand value that Red Bull and Monster have is quite high. Their EBITDA margins are high, their net margins are high, and these companies are basically cash cows. But still, it's not easy to create a behemoth that owns 17% of the US energy market. This is quite huge, and the asset itself becomes valuable after combining these two companies. And as I said, I had tweeted back in September that this stock is not touchable until they start doing some M&A. So I won't be surprised if these two companies start to do better. Then maybe they get another probiotic or an Olipop or that type of brand that they might acquire as well, which is very possible because these companies they generate a lot of cash, right? So that's interesting. So I'm just gonna look at these now. This is something that I would like you guys to note, because if you follow my work going forward, which I would really appreciate, I really look at alternative data, and Alani Energy's Google Trends are exploding. So you'd say, well, Google Trends don't mean much, but you'll see how if you correlate the sales with the Google Trends, you'll see how there's such a close correlation between these two data points. You'll see here, from in this period, in the summer 2024 period, the trends were flat, right? And you don't see any revenue growth. It's basically flat, and then yeah, you see a little bit of incline up here, and then that's happening here as well in terms of revenue, where it went from 60 million to 80 million. But then in 2025, beginning of 2025, you'll see these trends really explode, right? And that's where the revenue started to explode as well. So, and obviously, like this is probably going to take some time to translate, because some of the places where you're looking for the product, it's just not there. So the distribution takes time to catch up, right? So you'll see these trends are still going up, and that's how the revenue has been growing up as well. Like this is really nice to see. And the other thing that I was looking at was Alani Protein. I love their protein shakes personally, and this was one of the reasons why I'm also investing in the stock, because I really like the product. And you'll see how these also have been, trending really well. And this is the Alani hashtag Alani TikTok data, as well as Alani Nu TikTok data, and both of them are pointing in the right direction. So yeah, I'm just looking at where we are on time. I think this is good. And then this is the number of followers that they've gained, the black line on TikTok, and this has also been going up almost like they were averaging almost 1,000 followers a day at one point. And then same for Instagram as well. Both are exploding quite well. So their product marketing, their packaging is very is obviously catered towards women, and it's working really well, as we can see from the alternative data. These are some TikToks that I was just pulling for the sake of this video. You'll see some of these videos have gotten like 1.5 million, 3.4 million, 1.7 million. These are very important. So some people, again, following the content would be like, well, this doesn't matter. It really does. If you actually followed the CELH story back in 2022 or 2021, TikTok was a huge part of that story. There was a couple of reels that went viral where people talked about, losing weight and stuff like that while they were drinking CELH, and that was one of the reasons why the product caught fire. So this is very important, and I watch this very closely, and I mean, they're doing really well on TikTok. They've figured out the social game, and again, as I said, Congo Brands is really good at that. They have these two other brands as well, Prime and Lunchly, and I mean, they were viral sensations as well, right? So they know how to play this game, and they're obviously winning at it. And these are the search trends, visualized Alani Nu plus Alani on Google Trends, and you'll see this again, like this directly corresponds with revenue, and in April it's accelerating further. So and this is the Amazon search trend data for Alani Nu, and you'll see again here as well, like April is not even complete yet. We'll get the April complete data end of May, and this is looking really good. Like it's still accelerating for missing a few days still, and yeah, it's looking really, really good here. So yeah, the other thing I want to cover about Alani, which is very interesting, is the fact that their EBITDA margin is higher than CELH. Now, this is the most important part of the story, in my opinion, that I think is not being covered, or people don't really understand what's going on. So I would like to cover like how the distribution basically works here in this case. So how what happens in this market is the sell through and sell in are two concepts that are very important. So what happens is CELH would sell something to PepsiCo, and then PepsiCo would distribute it to the final retailers. So the retailers would want, if the product is selling really well, the retailers wouldn't ask for too many rebates, they wouldn't ask for too many allowances, they wouldn't ask for too many discounts. So when CELH was doing really well back in 22-23, the percentage of what they were selling at retail versus what they were realizing as revenue at source was very good. It was like almost 70%. So anything that sold for a buck at a 7-Eleven, they were getting 0.7% of those sales. Now that has dropped down to 0.8%. So this is a spreadsheet that I just looked at a few of the information that was available. Some I kind of calculated, some I tried to like piecemeal together. Now this is something that is very important. So you'll look at Alani. So Alani for 2024 had sales of about $600 million. The retail sales, as per the presentation, was about $800 million. So company sales to retail ratio was 75%, which is insanely high. Generally around 50 to 60% is considered really good. Whereas CELH, you'll see, is only at 48%. So there's a huge difference between these two companies. Like if a dollar sales, like if this is a sales worth it. Sorry, English is not my first language. Sometimes so if something is sold for a buck at 7-Eleven, CELH, every time CELH sells, CELH Holdings, the company, realizes 48 cents on that sale. Whereas for Alani, they get 75 cents. So this is like almost twice, like 1.5 times better. So every dollar of sale for Alani is 1.5 times better than every dollar sale for Celsius. So this is probably the most crucial thing that Wall Street is missing right now, and I think that's where the biggest alpha is going to be generated in this company. So you'll see the blended margins after the Alani acquisition is going to go up. So the Alani EBITDA margin is about 23%, whereas the Celsius EBITDA margin is 18.29%. Blended, it could go up to 20%. So that's also something that should really benefit them. And then obviously this doesn't this would also be impacted by the synergies as they come along once the market once they're able to get those two companies kind of joining together. So this is where I got those numbers from. 2024 tracked retail sales were $800 million, and there was a 64% YOY growth. This growth is only accelerating, which is quite crazy. Now, this is what I was trying to explain to you, the distributor model. So the reason why Alani is sitting at a 75% margin, whereas Celsius sits at 48, is because of this network. So how Celsius sells their product is through level 2 this level 2 distributor profile. So they will manufacture the product, it goes to PepsiCo then sells it to the retailer, and then it goes to the customer. So it's basically, there's another level of like an agent basically who's taking care of the product, who's selling it, keeping it at shelves and stuff. So there's another middleman in the whole process, whereas Alani is very focused through its own distributors, and that's what Congo Brands has done for Alani. And this is the reason why they are they have these like really good margins, such a nice margin profile, and every dollar worth of sale is way more accretive to Celsius Holdings. And the retailer network is quite intense. They have all these various brands that they have direct connections with, and they're selling through. So this is another thing for Celsius that's helping them out. I just did like a quick valuation analysis for this company. So the recent beverage industry acquisitions have been around 10 to 17%. The pro forma EBITDA is about 293 million, although I think it'll be way higher than this. The post-acquisition shares outstanding would be around 260 million. The projected annual sales, according to me right now, is about $2.3 billion. Enterprise value at 9.8 times. And then EV to sales would be at 4.4 times versus versus the EV to sales from Monster, which is 7.76 times. So this would be another another huge discrepancy between these two companies. And obviously with the Alani, there's a chance that Celsius grows faster than Monster. I remember during when the stock was going parabolic, at that time Celsius was trading at a huge multiple, like premium multiple to Monster, and people were anticipating growth, right? So when the market starts to anticipate growth, the multiples can really expand. I mean, if once they get to 10, 11, 12%, it'll be hard for them to be able to expand after that, but still be interesting to see. Then the other thing that I'm quite excited about for Celsius itself is Eric Hansen's nomination. So he's been with PepsiCo for nearly 3 decades. He previously had a role at PepsiCo. So PepsiCo is the reason why Celsius has been in all this trouble, because PepsiCo ordered way too much. The sales expanded, and then they were like, oh no, sorry, we ordered too much. Now we need to kind of back off. And then since then, they've just been optimizing their inventory. The management is, to also blame for a lot of that. But also, I mean, it's not entirely on them. So I think PepsiCo also had a huge role to play in this entire situation. And the other thing for Celsius that's going well to some extent is the international sales. Although the percentage of international sales to total sales is less than 10%, it still could be a decent possibility in the future for them to grow through. So what this all means for Celsius for me is that if Alani keeps on growing, and there's a world where we can say Alani gets to about, so like the spreadsheet here in 2025, so estimated retail Q1 sales as per my calculation is about $315 million. So that's really good, because that puts them at, as I said, about 6% market share, which it could keep on growing as we go into May and June, as the alternative data suggests. And I'm just analyzing that, right? And then I'm saying 4 weeks ended for April 2024 based on the presentation that we just saw is 123 million. If we assume that there's going to be no growth and it's going to be flat for this year, the total revenue at the retail level for Alani could be $1.6 million. And if we say 70% of that is going to come back to Celsius Holdings, we're looking at $1.1 million of revenue this year. versus $1.3 million for Celsius. And at that point, if Celsius remains stable or even grows with the industry, like at 7-8%, something like that, and Celsius is the growth driver, like we could be in a place where the company sales for Alani next year could be more than Celsius. So at that point, you're looking at a company which is at $2.5 million in sales, and $2.5 billion in sales. Sorry, and yeah, it's trading at 4 times sales basically, whereas something like Monster trades at 8%. Now again, or sorry, 8 times. Now again, Monster is a premium brand; they have everything going for them, but the Monster growth rate is not even close to what Celsius's could be. Now again, I'm someone who was in Celsius at various points, made some money, lost some money, made some money, lost some money, and like I probably have been at like maybe like flat, I guess. But right now I feel like the management is going to do a call in June or in May, end of May, and they're going to cover like things about like how the analysts should model Alani in. So the analysts are not really aware of the Alani momentum, and the social momentum that is there for Alani is quite crazy, and this is translating. So basically, I'll show you a picture of a couple of grocery stores here. One was a friend of mine in Texas, and the other one is what I took this evening. So this is his picture here. If you can see, you'll see all the other brands over here are discounted. Just the only one that's not discounted is Alani. So that's something that's very important. As I said, the margins that flow back to Celsius Holdings are very much impacted by what kind of sell through is happening at the retail level. You'll see each and all of these drinks, each one of them has is discounted to some extent. Besides Bloom, whereas and Celsius also. Whereas Alani is getting the best placement on the rack, and they also have no discounts, no volume discounts whatsoever. So that was interesting. And the other one, this is from me today. Same thing again. This is the first time actually Alani showed up in this grocery store. I've never seen them before, so they're gaining distribution, and that's another thing that I'm really excited about. And again, you'll see this is the only place, this is the only drink in this entire setup that even Monsters were on bulk discounts, Red Bull and everything else. Like basically the only one where there's no volume discounts, and you'll see the shelves are almost emptying out. Like this model is almost gone. These ones are also like quite depleted as compared to all the other ones. You'll see this is doing really well. So like as I said, it's something that I wouldn't be holding on to forever. I have learned the hard way that fads and consumer brands are not to be held for the longest time, but that'd be something that I would be looking at closely. If you want to know when I'll be quitting my position, I'll let you know. I have added a little bit, and after that call, I anticipate there's a chance where people kind of figure out that the depreciation is going to be higher, and because of the amortization of the goodwill as well as the inventory, because when a business combination happens, the inventory needs to be realized at fair market value instead of the cost. So in the first few quarters, the net revenue, or sorry, the net income at the bottom line might not be great, but then we'll see that expand as well as those synergies start to kick in, and things like that. And the EBITDA is not going to be impacted anyways due to those higher depreciations based on the combination. So I'm quite excited about it. I wouldn't say that I'm going to go all in. This is going to be a 4% starting position in my portfolio. I will share as we go along in this in this journey of this channel. As I share more ideas, I will share everything for free here. For the most part, and we'll cover things. If you want any alternative data charts, feel free to leave a comment, and if you have any suggestions for consumer stocks, mostly that's what I'm going to be covering. Please let me know, and then I could probably do a video on that as well. Please subscribe to the channel. If I'd be really thankful if you could do that for me, please. Thank you so much. Hope you enjoyed this video. We'll see you in the next one. Take care.